What is going on, ladies and gentlemen, and welcome to another episode of Let's Talk Crypto with myself, Bitcoin J, and of course I have with me here the BTC Queen. How you doing today, Queen? All right, Tigger. So we got Tigger with us today, which is going to be talking some Bitcoin. And I'm hoping that Tigger sees a bounce for Bitcoin today. Um, I had to go there. I had to hit it with that. But yeah. So today we'll be covering a bunch of stuff. I think some of the main things that we'll be talking about today is, of course, the price of Bitcoin currently sitting at $30,155. As you guys know, usually when we go live, the price goes up. So we'll be monitoring that today to see as we continue this live stream. By the end of it, if the price goes up, might open up a trade and everything right here at this current price, 30,155, to see what happens. Not financial advice, by the way. We'll also be looking at the rest of the coins. And we're going to be talking about XRP. There was a big thing last week. If you guys didn't hear about it, I'm sure you probably did. But a judge ruled that XRP was not a security, and we'll go a little bit more into details on that case. Today, we're going to go over the economic calendar, talk about the inflation report that we got last week. Of course, we're going to do the news with BTC Tigger today, and at the end of this, we're going to do a market analysis where we break down everything that's going on and look at some trade setups. And then, of course, a Q&A. So if you guys have any questions about anything, if you're tuned in live right now, if you have any questions about anything with crypto, drop it in the comments and we will try to answer it if we have an answer for you. Now, another breaking news, not breaking, but we are now officially live on Spotify, Apple, and anywhere else where you can listen to your podcast. We're officially on there. Last week's episode is on there. That's the first one that we uploaded to that. And then today's episode will also be on there. So if you're currently listening through the podcast, thank you so much. And make sure to leave us a 5-star review if you enjoy it. If you don't enjoy it, go to another podcast and leave them a bad review. So let's go ahead and first thing we're going to do is jump into the price here. Let's see, where's the main monitor? Here we go. So right now the current price is at $30,133. So you can see exactly what's been going on here. This is currently the 4-hour chart here. And you can see that last week we had a huge run up and then a big sell off. So we'll talk a little bit more about this, exactly what happened here last week. We actually spoke about some of this in last week's episode if you tuned in. So we'll go more into that today. Let's take a look at the rest of the market and see what is going on. Let me refresh it to make sure we have the latest prices here. And as you can see let's take a look at the last 7 days, and you can obviously see the biggest winner over the last week is XRP, up 55%, right? It's currently trading at 73 cents. And believe it or not, last week it hit a high it was above 90 cents. So last week it was trading above 90 cents and it was up, I think, 90% on the day, which was pretty crazy if you ask me. But that's exactly what happened last week once the announcement came out with the ruling. It's, of course, retraced a bit since then. So that's something that we're going to be monitoring here this week as well to see if anything else comes out this week, if there any more movements happen there. If we continue to look through here, we can see Solana up 27% over the last week. And remember, Solana was one of the projects that were put in the SEC's lawsuit, right? That they were calling a security, I believe. I don't know if it was in the lawsuit versus Binance or the one versus Coinbase, but it is one of the coins that was in that lawsuit. If we continue down, Polygon Matic up 8%. Let's see if anything else that's really pops out. Stellar is up 28%. If we continue going down, I don't see anything else that really pops out too much. We have optimism there, up 21%. We could just pull up here the top gainers and losers from the top 100 market cap over the last 7 days. Of course, it's going to show us XRP at the #1 spot. But look at what's not number 2. 1 inch is currently up 39.7%. It just broke into the top 100. It looks like it's at the 99 spot. Then we have Caspa at the 71st spot, up 34%. In the last 7 days. Compound up 32% and Stellar up 28%. If we look at the biggest losers in the last week, Bitcoin Cash. So Bitcoin Cash was kind of on a tear over the last few weeks. It looks like it's currently retracing a bit here. Then we have Bitcoin SV also down 11%. So the first two are Bitcoin forks. That's interesting, right? Then we have eCash down 10% and Kava down 6.9%. Litecoin is also down 4%. So let's go ahead and now take a look at the economic calendar for the week, see if there's anything going on. And the main things that we're going to see this week is going to be on Tuesday, tomorrow, U.S. retail sales month over month. I don't think that's not going to have much of an impact on the market. Building permits not going to have much of an impact on the market. So these two events, they're really non-events for us. Now the big event that we'll probably see already having effects on the price of crypto this week is the event that we have coming up next week on the economic calendar, which is the Fed interest rate decision. That is going to be on the 26th of July, next Wednesday at 2 p.m. Eastern Standard Time. So that's definitely something that we need to keep an eye on going forward, because right now, basically everyone thinks that they are going to do another interest rate hike. So if they do another interest rate hike, it will put basically the interest rates at 5.5%. Currently, we're sitting at 5.25%. If we take a look here, let me refresh this. We'll see the probability for a 25 basis points hike next week on Wednesday is sitting at 97.3%. Now, what that tells us is that it's probably already priced in, because it's basically 100%, right? Last month we saw something similar, but it was at a pause. I think we're sitting at like 95% area for a pause, and we got a pause. This month we're sitting at 97% for a 25 basis point hike. So we're probably gonna get a 25 basis points hike, right? So yeah, one thing to note is that this usually is priced in beforehand. Like I told you guys, market loves to kind of front run the news announcements, right? So this happens with CPI, it happens with interest rate hikes, decisions, and all that. So that's currently what we're seeing. So we've seen it get priced in a bit here. Now, what we'll see on Wednesday, once that report comes out, depending on what happens with the report, if 25 basis points comes out, I imagine at that point it's going to be, we might move, the price might go down a little bit, it might go back up a little bit, but I don't think it's going to be anything crazy if exactly what the market is expecting is what happens. Now, where we would see volatility is if the report is something that the market wasn't expecting. So for example, if we get another pause on Wednesday, markets are going to go ballistic to the upside, right? Everything's going to moon. If we get a rate hike higher than 25 basis points, then the market once again is going to go crazy, but to the downside, everything is just going to dump, right? So as long as we get what's expected, then I don't think we see too much. We might get some volatility on the day of to the downside or to the upside when the report comes out, but most of the volatility is probably gonna get retraced right away, if any. And what people will be watching for, and what might really affect the prices, is it the press conference after the report comes out, after the decision comes out, right? So the decision comes out at 2 o'clock Eastern Standard Time, 2 p.m. And then 30 minutes later, we have Jerome Powell, the chair of the Fed. he's going to basically have a he's going to be speaking, right, and he's going to be talking about why they did what they did and what their outlook is going forward. So then that gives us basically a glimpse, an idea on how they're seeing it right now and how they might be moving forward in the future. And as you guys know, they usually try to be very, very hawkish, kind of use a hawkish tone basically all the time, because they don't want to sound bullish and then give everyone an excuse to kind of shoot the market up, right? So I think that's why they probably do that. So their tone is usually more to the hawkish side. So that's something to keep in mind. So if we get the 25 BPS plus a hawkish tone, we might see downside next week, or at least during that time, just depending, what else might also be going on in the market. So the last thing going on here, let me see. The last thing going on the economic calendar is we do have earnings. So earnings season has started. I think last week was actually the first week of earnings season. And usually in the beginning of the earnings season is like banks and stuff like that. But this week we do have, I know Tesla is going to be reporting earnings. And that's usually has a pretty big effect on the market overall, because they are I believe they're on the NASDAQ, I think. Do you know, Tigger, if Tesla's on the NASDAQ or S&P? I want to say NASDAQ. I want to say NASDAQ, which is a technology sector, right? It's on a NASDAQ, right? Okay, so that now when earnings come out, when earnings season happens, it sometimes could affect the overall market. So if earnings are bad, you'll see the overall market start going down, and sometimes crypto likes to kind of follow traditional markets. So we could see downside or upside depending on how the overall earnings come out for everything. Because the earnings, it kind of gives an idea of where the economy is overall, right? So again, something else to keep an eye on this week. All right, I think I've pretty much covered the main things I wanted to talk about here. So next, let's go ahead and jump into some news with BTC Tigger, our guest for today.
Security. Now, the one thing I kind of want to caution everyone is that there is the possibility of this going into retrial. Now, it is unlikely, according to some lawyers, that there will be, a flip in verdict. However, it is something that is possible, and I don't think although XRP did win the verdict on whether or not it was security, the verdict isn't in for the rest of the case. So all the other stuff that was in litigation, specifically with the founders and them enriching themselves and all that other stuff, that's still on the table. But it is good news for the asset overall, which is cool. But it's not a full win yet for the entire XRP team, because there are other things that they are facing. However, a lot of exchanges have relisted XRP, such as Coinbase and Binance and Kraken and a lot of other individual exchanges, because they did take this as a win. And this looks very optimistic for a lot of crypto projects overall, which is really cool. But again, this has to do with the initial sales of XRP. So we actually still have to wait on the verdict for other things and hope that there is I guess no retrial. We don't want that, right? We do not want to try to retrial that. So for now, we will celebrate this win. But please do remember that this is a partial victory, as some news I guess outlets have reported that it was a partial victory. Others have just taken it as a total win. But we do still need to keep in mind that there is still stuff on the table. But yes, it looks like there is a lot of buzz around XRP for that reason. Everything from US banks using XRP as a settlement system outside of SWIFT to, as Jay said, XRP going up 90% for a day. So a lot of insane stuff happening right now. In the end, in terms of like some of like the banking stuff and like money transfers, I think Ripple got a lot of I guess notoriety in a sense, because a lot of the things they were saying where they had like partnerships with like MasterCard and this person and that person, and the company's coming out and saying, well, that's not true. Now, because of potentially this verdict that hopefully sticks, maybe it will help them get some of those partnerships in place and like actually help these internal money transfers, because that's what actually JP Morgan Chase does that with their JP Morgan coin. That's basically what they do. It gives them the ability of doing wires within whatever network they created and trading value internally at a low cost with low fees. So that's basically what XRP is in a nutshell. It's something to replace the current SWIFT system and work in conjunction with banks. So this is something that could be optimistic just based off the recent ruling. But yeah, we'll see what else happens in the next upcoming weeks with the case. Hopefully nothing crazy. But yeah, for right now, XRP is deemed not a security. Now, I did see that Binance Lightning Network is now live. Yesterday, or actually this morning, Binance announced that its Lightning Network now allows people to withdraw Bitcoin from its platform. That is not including the US, that's Binance.com overseas only, I believe. US, I think, is paused for all withdrawals. And outside of that, we're just watching the Coinbase case very closely. It looks like the judge is ruling, for the most part, siding a little bit with Coinbase, being sympathetic towards their voicing. The tone of the judge seems promising towards Coinbase, which is actually pretty interesting. There's also word saying that the SEC let Coinbase know prior to them going public that they may have been violating securities law, which again, why on earth are you giving thumbs up to a company that's violating securities law so they can go public? Just actual insanity. So we'll see what happens with that, but not too much new news coming out of the Coinbase case as of yet. And then last but not least, that Bitcoin ETF we've been waiting for is now being revisited by the SEC currently this week. Maybe by next week we will have a verdict, if not this week. But I think there is a very promising chance that we will see the first Bitcoin ETF come out, hopefully before the end of this month, if not early next month. But that is the majority of what's going on in the markets.
Awesome, and yeah, that would be pretty amazing if we get that Bitcoin spot ETF. That also a catalyst that would definitely send everything up. I still feel like the XRP thing is probably bigger right now. At least I don't know. I think for the overall industry as a whole, because it's going to kind of slow down the SEC, I think, right?
It's definitely set the bar.
That what?
It's definitely set the bar.
Right. And it's going to set a precedence, right? And slow the SEC from trying to aggressively attack crypto companies and exchanges with no other, with basically no clear guidelines. So, yeah, I'm very excited about that. But I think the Bitcoin ETFs, the spot ETF, is also obviously going to bring a lot of money into the market, which, of course, is, with more liquidity coming into the market, prices are going to go up, right? But yeah, so let's go ahead and jump into the market analysis. Again, if you guys have any questions about anything that you want answered here, make sure to drop it in the comments. And then after we do the market analysis here, we're going to go into the comment section and look for some answers to answer for you guys. So let's go ahead and jump right in here. Let me switch over. There we go. All right, so we're going to look at a few things, but let's start. As always, I always like to do a top-down analysis, right? I think if there's any new traders in here, or anybody looking to get into trading, and they're looking to kind of figure out, they want to know how to start, I say the first thing that you probably want to do is learn how to just kind of do a top-down analysis, right? Where you're looking at the chart, you're looking at prices from a high time frame and then going down, right? So right now we're looking at a monthly chart, and it's very clear, right? We can see exactly what's been happening this year. We can see in January we had a huge move up. February there wasn't really too much going on. Then in March we had once again another big move up. And then over the last, in April and May, we pretty much kind of stuck in a range. And then last month in June, we once again had a move up. And then now we're once again, just kind of ranging, consolidating for the moment, right? So the other thing you can see is we can see a clear trend. We can see a clear change of trend, right? So that's another thing that you always want to know. You can see the clear change in trend here, and then the clear change in the trend now to the upside. So you always want to be looking to kind of trade within the trend itself. It's going to make your life way easier. So what we're looking at right now is that as far as on the monthly time frame, it's something that worries me a little bit, but we have to keep in mind that we're only halfway through the month right now. So let me actually go to, I think, here we go. So on the monthly time frame, right now, as of this moment, as of this recording, we have what's basically a bearish pin bar while at a resistance point, right? So right now, resistance is sitting at $31,000, right? You can see if we look at the last 4 months, basically, we first hit 31,000 back in April. We got rejected. Then in May, we basically went down, consolidated. Last month, we went back up, retested 31,000, kind of got rejected again. This month, so far, we broke above 31,000, almost reached 32, but then got rejected again, right? And now we're sitting here at $30,000 once again. Now, so what this leaves is this big wick to the upside with the body being on the downside of this candle. And what that is, that pattern in there is, that's called what that candle is a bearish pin bar, right? That means that there weren't enough buyers up here, so sellers took control of the market, pushed prices back down. So now when you kind of put this with a resistance area, a lot of times that could mean that we might see some downside, because that's basically what it's telling us. If it were to close like this, right? And again, this candle isn't closed yet, but if it were to close like this, this is telling us that sellers are currently in control. There's more supply than there's demand, right? And it could mean a retest. And when I say that we can go lower, I'm not talking about, we're going to drop way down here or anything like that. What I'm talking about, look at this trend line that we've been following, right? We could potentially retest this trend line here, and that currently sits probably around $27,000. So that's one thing that we're going to be keeping an eye on for going forward here for the rest of this month. Now let's drop down to the weekly time frame. So now that we're at the weekly time frame, we can see things change a little bit. You can see a little bit more clearer on the day-to-day aspect. And once again, on the weekly, last week, if we kind of look at this, last week, what do we have here? This is, once again, a bearish pin bar at resistance. So that means that last week, and this candle is closed already. So that means that last week, we already closed that candle, and that is a reversal or top out signal. Not mean top out for the trend, but just for the immediate future, right? And that could signal some downside coming up. And downside would mean, like I just spoke about, a move back down here to retest this trend, sitting at around $27,000. Now, I'm not saying we're going to go all the way down to 27,000, but it is a potential. That's where the trend line currently sits at. Now, another thing is that we have some imbalances as well. So if we look at this right here, this is called FVG, which is fair value gaps. And basically what that points out is imbalances, meaning that there was a huge candle. You see this massive candle, right? When there's an impulse move like this, a lot of the times what happens is that the price retraces that move. Maybe not the complete move, but it retraces at least 50% of that move, because there are orders that never got filled because this move happened so fast. So there's a lot of buyers. There's demand kind of sitting down here. There's liquidity down here. So what a lot of times the market does is that it'll push back down to this area, pick up those orders, and then continue up. So that could be something that we see here. And if we look at previously, look at this move right here back in March when we had this candle, 26% candle, right? Look at what happened with the price. It kind of topped out, and look how it retraced for a bit. And look at where it retraced to. This is about 50% of the candle, right? So that could be something that we see here. And if we look at 50% of this candle, if we say that, all right, we're gonna kind of range in this area here for the next couple of weeks, maybe, that trend line at that point would be sitting around $28,000. So if we were to kind of do the same thing we did last time we had an impulse move, that's kind of, that's some confluence there, right? We would be at the trend line here, which is also halfway through this this fair value gap, which is a trade that a lot of traders do, right? So there's a lot of orders down here. So, and again, if we look at this one, look at this big massive candle here. It moved up, and then what happened? It eventually retraced. Now this one didn't go back to halfway the candle, but it did get pretty close. You can see this would have been around halfway through the candle, and it came in about a quarter of the way, right? And again, at the trend line, it bounced right back up, continued on, and so forth, right? So that's something that we're watching here. We have to keep an eye on it. We have to see what happens this week. If we do not break above this resistance line, that could be something that we see in the next week or two, a retest of this trend line, and we see the prices kind of fill this FVG area, the imbalances in that area. So that's something that we're watching there on the weekly. Let's now change to the daily time frame, and I'm gonna change my chart here. So on the daily time frame, we can see pretty much what we've been experiencing since the big move up last month, right? We've been ranging in this area between $30,000 to $31,000. We've had some deviations to the upside, and then a big retracement down. Now, if you remember in the episode last week, we spoke about this, right? We spoke about these what the market makers like to do. We spoke about how a lot of times what they like to do is they like to they look for the highs, and they like to kind of break above the highs and then shoot the price back down, right? We saw that here. And guess what? Last week, we just saw that again. And look at this. Look at this candle, right? Look, this was the previous high, broke above those highs, faked out, and look at this very next candle. We had a massive dump to the downside, right? After breaking those highs. So what was it that we mentioned last week? The idea was that they want to stop everybody out, right? That's what market makers want to do, is grab as much liquidity as possible to fill their positions, whether it be short positions or long positions. And the way that they do a lot of that is by liquidating retail investors. So, and stopping out retail investors. So how is it that they're getting liquidity by doing this? Well, a lot of traders, what they do, very simple strategy, is they set buy orders above previous highs, right? So above previous yearly high, above a recent high, they set long orders, right? Now, what about traders that are shorting? Because that would only trigger long orders and breakout traders. Well, people that are shorting, a lot of them, what they do once they get to this resistance area, right? They're going to place their stop losses, guess where? Above previous highs, above recent highs, above yearly highs. So what happens is a bunch of people have orders placed right here, right? We have not only breakout traders placing orders there, we have short traders placing stop loss orders there. So there's a lot of liquidity in that area. So what market makers do, what do? Like, they know this, right? They know that you guys are setting your stops there. They know that you're setting your entry orders there. So what do? They trigger it all. They trigger your long breakout orders. They trigger your short stop loss orders. They take all that liquidity and then boom, a massive candle to the opposite side. So they just took all that liquidity, they took a bunch of money away from retail investors, and they flushed the price to the opposite side. Now they're just gonna kind of do the same thing to the downside, right? They're gonna say, okay, how much, where's the area that we can take the most amount of money, the most amount of liquidity, where we can fill our positions, fill our huge orders. And they're going to be playing it the same exact way. And this happens over and over again. So that's something that you need to be kind of aware of when placing orders in either direction. Whether you're with the trend or against it, whether you're going long or short, doesn't matter. Market makers are looking to stop you out. They know that you're setting up stop losses down here. They know, if you would have been longing over here with stop loss here, they just stopped you out right there. If you did it again over here, they just stopped you out right there, right? They're going to know that you're doing that, right? If you placed your stop loss below this candle, guess what? Today they just stopped you out. So they're gonna keep doing that. They love to do that. It's something that you're gonna see over and over and over again in the market until one of these levels gets broken. And how do you know when the level gets broken? Well, you're going to have to wait for a candle close, right? Either above or below that level. So we did get a candle close here that was bullish, but the very next candle dumped the entire move. And this is a bearish engulfing. So this is a huge engulfing candle there, which could mean a move to the downside, right? We could potentially see further downside. So if you don't want to get caught trying to take a breakout trade, usually the way that you play it is you wait for that to be confirmed, the move to be confirmed, let's say to the downside. If you're trying to short below the resistance, you're gonna have to let the price go down, let it come back and return, and when it tests, that's when you would open your order there. Now you are gonna miss a lot of moves to the downside because sometimes they happen just like this, right? Where they don't return, they just dump really, really fast. So, I mean, that's part of the game though. And you just kind of have to, know that that's going to happen and be okay with it. So again, that's something that we're watching there. This is still a huge support area. As long as price continues to stay above this $30,000 area, it's still a big area of support there. So last week we spoke about, when I was telling you guys, what trades I was looking for, where I was looking for trades. Remember, we spoke about this last week on Monday. I said that I'm looking to take longs at this support. So I'm still doing that same thing until proven otherwise. I'm going to be looking to long the support. Now you have to be careful with the longs because remember the market's looking to shake you out. So if I get shaken out and I see price returns back above, what I'm doing is once again opening a long at $30,000. Another thing you can do, you can also like kind of ladder your position. So if you're going long at 30 and the market drops lower, then you can, maybe add on to your position here and so forth. But that's a little bit more dangerous because you don't know how low it's gonna go. So, you might think, okay, at 29,500, I'll add on to my position there. But then price could drop down to 29. And then at 29, you'll be like, all right, there's a support here. I'll add on to my position there. We might retest this trend line down here at $27,000, $28,000. So you have to be careful. You have to make sure that if you're doing that, you know what you're doing. So I only recommend you to do something like that if either one, you're very experienced with trading like this and you know how to handle your liquidation level so you don't get your position liquidated, or two, if you're not trading with leverage. So other than that, probably I would say don't try to take those trades because they're just very, very dangerous and you can get stuck bag holding and potentially get liquidated if prices go a lot lower than what you initially thought, right? So yeah, so what I'm looking for this week, I'm looking for bounces here. I'm looking for the price to bounce here. I again want to ride it to that top, right? I wanna ride these levels to the top. I'm looking to take profits probably around 30,800, which is this level right here. It's been a big resistance here, as you guys can see. And I'm actually going to the 4-hour chart here. You can see that 30,800 level has been huge, right? And then that next area is probably going to be that 31,000 and above, right? So if we pull up, let's take a look at our liquidity here, liquidity levels, to see if what is going on in that aspect. You can see that we have some liquidity here to the upside, all the way up to about 30,400 right now. And we have liquidity to the downside. These liquidity levels are sitting here at 29,700 and 29,400. So that was actually the low of the previous low here, on this candle here. So and remember last week we had a bunch of levels to this upside and we spoke about 30,700, 31,700. Remember I said that we'll probably retest 31,700, which was above this level because there was a lot of liquidity there. And look what happened. Look at this. That's the exact level we tested. We went up as high as 31,869. So we deviated a little bit above it and then they crashed the entire thing down. So now to the upside here, we'll see that the biggest level right now is 31,963. So pretty close to 32,000. So if it gets here, it's most likely going to hit 32,000. Above 32,000, we have liquidity levels at 32,400 and 32,600, right? Now I want to pull up here this heat map right here. So this here is a heat map of the liquidation levels. So this is basically people that are trading with leverage, where the liquidation levels are. And this shows us, this is on the monthly time frame, that the majority of liquidations right now are to the downside. Okay, so if we look up, like we see and to explain this a little bit more, the brighter yellow that this heat map is, the more orders that there are in that area, the more liquidity that there is, liquidations, right? So you can see, look at last week. Remember we spoke about that 31,700. That was this level right here, and look where price went. It triggered that, all those liquidations, and boom, shot the price back down. Now we have some liquidation levels down here. This is at that $29,000 area. There's really not a lot. You can see it's really not that bright, but as we get closer to that $28,000 to $27,000 area, we see it gets a little bit brighter. And then right now, the brightest one, which is where the majority of liquidation orders are, is around $25,000 to $24,000. So I'm not thinking that we see a move down to 24, 25, but it isn't out of the realm of possibilities. But I do think maybe a move down into this liquidity level, which is around 29,000. And if it were to push lower, then 28 to 27 would be the next big level of liquidity. So now to the upside is up here, right? It's above at this point. We've taken out all the liquidation levels between $30,000 to $32,000. The next liquidation levels are sitting between $33,000 to $34,000, and after that, it's at $36,000. So if we're looking for liquidation levels to the upside, it'll probably be up here. But what I'm thinking right now is price might at least aim for these liquidation levels right here, which is in that $29,000 range. So that's something to watch out for here in this coming week. And this is on the 7-day time frames for liquidations. We're basically zooming in a bit here to the more immediate future. And we can see there's a lot of liquidations here in the $29,000 area. So because of that, I think there is a possibility, there is a potential that we might see some deviations to the downside this week and leading up to next week when the Fed interest rate decision comes out to basically take these, trigger these liquidations, right? They're gonna trigger all these liquidations and then, start moving the price back in the opposite direction probably after that. So those are the things to keep in mind. If we do see that move to the downside, the main thing that I'm going to be looking for is potentially a long here. You can see that this is a Fibonacci level right here. That's around $29,000. If that doesn't hold, then my next support that I'm looking at is this trend line, which again is currently around $27,000. And if we look back at those liquidation levels that we just spoke about, there's a lot of liquidations below 28,000 at that $27,000 area, right? So that gives us some confluence with this being a level that the market may trigger for if we were to break to the downside of this range. Now, if we're breaking to the upside, we just showed you guys those other levels, which is basically between $32,000 to $34,000, I think, is where price could go. My overall target to the upside, if we were to continue up, is of course up here, which is between $35,000 to $38,000. And if we, when looking at this, the liquidation level heat map, you can see there's a lot of liquidation levels up there as well. So it would make sense for prices to reach these levels as well on a move to the upside. So that would be what I'm targeting. But right now, this week, and of course, every day we have to reassess, reevaluate what's going on in the market. But I'm looking to take longs still here at $30,000. And when we get up here to the top side, I might be looking, if I see rejections like this, then I'm looking for to potentially short in this range. So last week we spoke about shorting up in that range. I think I mentioned it in my Discord at $31,700. I said that I would probably take a short there, and you can see that exactly what happened here. We had this massive candle to the downside. So pretty much how I'm playing it this week. If you guys have any questions about anything that I just went over, I know I kind of went over a lot of different scenarios and a lot of different things. I kind of gave you guys a bearish and a bullish outlook. But you have to always kind of be open to both scenarios. You don't want to have a bias to the upside or downside, because that's going to affect your ability to be able to trade the right way. You want to try to make money regardless of which way the market's going. So if you're an experienced trader, you can trade it both ways. If you're less experienced, then I would say just stick to the side with the trend. Always try to trade within the trend. Even if you think price is going to go down at resistance, that just means you should be taking profits at resistance and waiting for a long re-entry at the next support. So that, as a beginner, that's what I would recommend. You want to trade it like that. You don't want to trade against the overall trend. So Yeah, that's pretty much what I got to say there. What do you think, Tigger? Do you see an upcoming bounce? I can't hear you.
Just kidding. I muted myself while you're talking. So I think eventually, I think with the overall news that we've been seeing in the market, especially with most things being positive for the most part, we're definitely going to see a there's going to be a retrace because we went up way too fast, kind of like how you said before. But we're going to ultimately bounce up. Like we are ultimately the trend is bullish. We are on a bullish trend upward. This is just historically how it's built in. And then, just common events, this is what's going to happen, right? There will be fluctuations throughout these periods of times just because things are moving faster than, the market can pretty much like fill orders, which has a lot to do with the price being retraced. And then kind of like what Jay said with all the market makers, all that stuff makes sense. Their liquidity is their main goal and their main purpose. And if they can see, things like the heat map and have access to these tools, just like, all the traders do, they will use it to their advantage. So yes, be careful with a potential retrace. For us to go under 25, I think that's probably like the lowest we'll probably go, right. Just based off the growth amount that we will be facing. But yeah, I think overall, if you are trading, definitely play it safe. Don't get bold. People get bold around these times. I think the only appropriate time to get bold is if we're like for real on like an upward trend, like gaining up, like, price up $1,000 every day, day after day. That's really the only time I'd get bold. Other than that, be safe, guys. Trade safely. Yeah,
100%. So now we're going to move on to the Q&A portion of the stream. So if you guys have any questions, drop it in the comments and we'll answer those for you. I did ask on Instagram yesterday for some questions. So I'm going to be pulling them up here right now and we'll answer a few. Let me see. And if we get any in the chat, then we'll answer those as well. So let me go ahead and pull them up here. Give me a second. And I answered some of these already on Instagram. So if you want to take a look at those, you can as well. But let's go here. Let me see which is a good one. So somebody asked, where in the world are you? Just wondering what the time difference is. So we're both located in Miami, Florida. Which is Eastern Standard Time. Okay.
Miami.
Yep. The next one is, do you think Bitcoin can hit 6 figures in 2024, 2025? What do you think, Tigger?
6 figures, 2024, 2025. What is 2023?
Yep. Basically the next bull run.
Yeah, obviously, yes. Bitcoin will most certainly hit 6 figures. Like that's not the question of if, but when.
Right.
Between 2024 and 2025, absolutely.
Yeah.
100%.
Yeah,
there's no doubt.
I agree with that as well. Let me see. How long have you been knowledgeable about crypto? So basically, when did you get into crypto? I got in 2016.
2017, yeah. It's been a couple years now, guys.
Yeah, so I actually tried to get into crypto earlier on, probably around 2013, 14.
Same.
But
I couldn't buy. My bank kept rejecting.
Yeah, I couldn't buy. And I got frustrated, and I was like, I just didn't buy. So it sucks. I wish I would have gotten earlier, but hey, it is what it is. I did end up still getting in at a pretty decent price. The only regret I have is not buying more, right? I think that's the regret everyone has. And I think in the next 6, 7, 8 years, we're gonna look back to this time and we're gonna be like, damn it, why didn't I buy more, right? So I think that'll hindsight is 2020. I think we both believe here, and most people, anyone watching this probably believes and knows that Bitcoin's gonna go up, but there's still that you don't want to go all in And then, but maybe 5 years down the line, you're gonna be like, damn, I should have just gone all in, like you should have just sold my house, sold my car, sold everything, just put it in crypto and just struggled for a couple years. And you know what I mean? Like, and I actually know a couple people have done that, by the way.
That's crazy.
Yeah.
Yeah, no, I mean, honestly, this rule of thumb, because, there's enough to eat for all of us, right? So bears eat, bulls eat, pigs get slaughtered. Weigh out your things properly. Because think about this, right? You go all in, everything's high and mighty, and the very last thing in the world that you thought could possibly happen, like the computer that you stored all your stuff on, goes to shit, and maybe you lose it and you forgot, and now your computer is in a landfill and there's billions of dollars on it.
Yep.
You went all in for what?
Yep.
So honestly, guys, be level-headed. Do not forget your keys. Store them safely. Keep track of your assets. Be your own bank. This is about your own banker, guys. I think if you just go all in and forget about it, like these things are more likely to happen. And if you're like paying attention to your stuff and you're just like on your shit, just in my opinion, because there's too many horror stories at this rate for us to pretend like it can't happen, right? So be humble, and do what you can. Do it at a timely manner, because and the world's going to continue, right?
Yeah.
So just a word of advice.
Yep, I agree. When will crypto start to go parabolic?
Again, probably like mid next year, I'd say.
Yeah, I think after the halving is definitely when I think like things will really kick off. Right now, it's probably
slowly until the end of the year. Like maybe we'll end off this year with like 50K, right? We're going to slowly creep up to like previous highs, right? So like 50, 60K. And then once we start like nearing the halving and getting past the halving, that's like when things will start to like jumble. In the past, it's been a year after the halving. Last run, not so much, because COVID and like that was a very unique situation. Right. This year, this year might be different. I would expect things to get hot going into the middle of going into next summer. Let's say I would expect things to get hot.
Yeah, I think. Right now we're basically, the moves are more based off catalyst, news events, what the macro economy, what's going on in the world with inflation reports, the interest rate decisions. That's what's kind of been moving prices this year. I think once we move kind of past this and start going into next year and the halving coming up and all that, then that's when we might really start to see some big moves and things like that. But remember, when there's a big move up, there's also a big move down. So you got to be prepared for all those scenarios. Let's see, we got 3 minutes left. Let's see, any other questions here that we should talk about? Share some of your mistakes, learning experiences from the previous bull markets, specifically 2017 and 2021. Do you have any?
Make sure you don't ride the coaster back down. We're on a roller coaster, guys. Okay, but think about it this way. We're on a roller coaster. We're on the way up, right? Don't ride it back down. Because what was it all for, right? I was lucky enough to not write it back down, and I purchased a house, which has increased in value. So I did very well with my gains, and I, put it into another appreciating asset, right? So I would suggest for, anybody to do the same. You don't necessarily need to sell out of crypto. You can still, you don't have to go back into fiat, but go switch into a stable coin if you feel like we are, at some like parabolic levels, like, it's like, oh my God, Bitcoin's like $150,000. Where are we going from here? If you feel like you've made sufficient gains, get out, right? If you see that the market is down $10,000 from where it was the previous day, get out. Those are things that you need to keep in mind because, yeah, there is no, again, bulls eat, bears eat, pigs get slaughtered. Do not pig out on gains.
Yep.
Never do that.
Yep.
That's probably rule number one.
Yeah.
Rule number two.
I didn't know you had another rule. My bad.
Number two, put into the market whatever you can. Don't sit around thinking, oh, I need to get like, $500, $1,000 at least to get in. No. If you got $5 a week, that is enough. Whatever you have left over, right? Whatever savings you think you have, put it in the market, right? Like if you're not saving up to like go on vacation or like, do something specific and you just got money laying around your bank account, put it in the market. Personally, I keep very, 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 very minimal amounts of cash on me at all times. Like if somebody robs me and like tries to take all my account, like maybe they'll get like $500 out of me, like max. Like otherwise my bank account will go deficient. I just don't do it. All my savings are in assets or crypto or something. I do not keep cash handy. So whether you have a little bit, $1, 50 cents, whatever, go on Cash App, go on, PayPal, all of these apps, Robinhood, they allow you to buy Bitcoin. Just take your savings and put it there. Because I mean, that's probably like the biggest mistake I made coming into the industry was not taking whatever arbitrary little bit amount of money I had and putting it into this. Rather than doing nothing at all. Like do something, but don't do nothing at all. That's probably the second like word of advice I'd have. That's about it.
I definitely agree. And what I would say is the first one is DCA, right? So when your dollar cost at the same way that we recommend dollar cost averaging during the bottom, while prices are down, while it's a bear market, whatever the case, I recommend the same thing when things go up. This now instead of dollar cost averaging in, you dollar cost average out. So it's the same thing. All you're doing is just in the opposite direction once all the prices start going up, once you're in profits, right? And I actually did a thread yesterday on Threads. I didn't do a thread. I basically did a post, I guess, on Threads. And it said, usually need 3 market cycles to make it. The first cycle, you're probably going to be down bad. A lot of people, the first cycle that they join in, they buy the top, right? Of course, there's people that get in earlier. And even like, for example, for myself, the first cycle for me, even though I got in early at a good price, I didn't sell at the top. So what happened, I was in profit, but I wasn't in the same profit that I was at the top. So at that point, I was like, I can't sell right now, because I knew what the value could be. So at that, I just kept accumulating after that first cycle. The second cycle is where you really, really begin to understand and learn. You're still making mistakes, but during the second cycle, I was able to actually take profits. I was able to actually, have money that I was able to pull out and basically use for other things, right? Like BTC Tigger said, she used her crypto to buy a house. Like, that's crazy, right? And I think that's what happens in the second cycle type of aspect. You start really learning how you can really maximize your profits and maximize the peak of that bull run, right? And then the third cycle is to implement everything that you've learned the previous 2 cycles. And I think that the third cycle is where you really can just like, the first cycle, you made all the mistakes. The second cycle, you improved some of those mistakes, but you still probably learned a few things. The third cycle is where you just kind of put it all together and become a multi-millionaire, billionaire crypto holder. So I think we're going to end it with that one. But yeah, that's what I think.
Be safe out there, guys. And first of all, hold on. This is actually the most important thing that everyone needs to know. If you are new to this industry, do not buy random metaverse coins, okay? Do not buy random things that some person told you that it was gonna go up, and it's been going up, and it's up, like 100% for the day. Don't do it, okay? Because here's what's gonna happen. You're gonna be like, wow, look at this thing, isn't it so cool? And then 2 months from now, you're gonna be like, oh my God, I lost it all, okay? And then you're gonna hate crypto forever, okay? Do not do that, okay? Stick to Bitcoin. If you're bold, go to Ethereum, maybe even Cardano, but do not just go buying random things that some person recommended because somebody else told them, blah, 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 okay? Like, that is the biggest thing. Every time I run into someone who is just mildly knowledgeable about crypto and they complain that they're down in the hole and what's going on and is it dead, it's always the same thing. They bought some bullshit I've never heard of and now they're upset, okay? Just buy Bitcoin. You can buy Ethereum. Just buy the things that are actually vetted for and you'll be fine. That's it. I'm off my soapbox.
And we're going to end it on that note. Thank you guys to everyone who tuned in live. Thank you guys if you're listening on the podcast. I appreciate all of you. We are live every single Monday at 1 p.m. Eastern Standard Time. Usually, sometimes we have to push it back to 1:30, 2 o'clock. But it's fine. We always let you guys know. I appreciate everybody that tuned in. Again, we do this every single Monday. Let's talk crypto. Episode 21 already. So we will see you guys on the next one. As always, guys, peace and love and be safe.